Hello and welcome everyone to the weekly market updates from 𝗪𝗵'', broadcasting from our offices in Dubai. Of course, last week was an exceptionally eventful and truly significant one before the global markets start entering the eagerly anticipated holiday season and the wonderfully festive atmosphere of Christmas and the upcoming New Year. By the way, last week was an excellent week for the stock markets. Global stock indices in the United States, Japan, and also in the Eurozone closed with solid gains. And as you most certainly know, most of these significant indices have already reached or are still currently at truly remarkable record historical highs. The single biggest winner in all of this financial activity was undoubtedly silver. Indeed, silver was up a substantial 8% just last week. Gold experienced a significant increase of 2.4% last week. This precious metal then approached and on Monday definitively reached unprecedented record levels at $4,400, even surpassing that impressive figure slightly. Silver is also trading close to $70. By the way, silver is up 140% in 2025, and gold is approaching nearly 70%. Strong gains and increases in 2025. Of course, it's clear that this momentum is still ongoing. This week, and of course last week as well, we saw how oil prices also closed higher. Today, what's happening in the oil markets is clearly very much connected to the tensions between Venezuela and the United States. We also saw how Ukraine carried out attacks on ships and tankers carrying Russian oil in the Mediterranean Sea. This could perhaps be a turning point. It might be a significant shift in this ongoing conflict. Last week, the Europeans announced support for Ukraine amounting to 90 billion euros, which is more than $100 billion. Of course, the European countries were trying perhaps to get their hands on or take advantage of the Russian currency reserves in Europe, which are estimated at more than 250 billion. The Europeans did not agree on that, and the decision was to provide a loan to Ukraine of about 90 billion euros. This week, as we mentioned, we are starting to enter the Christmas and holiday season, so there will be little news. On Monday, there will be news and figures related to growth and GDP in Britain for the third quarter. Of course, it seems that growth is not strong enough. We saw how inflation declined in Britain last month, dropping to 3.2 from 3.4. That's the first thing. On Tuesday, there will be figures from the United States related to growth and the American GDP for the third quarter, as well as durable goods orders. Durable goods orders are very important and give us an idea about the performance of the manufacturing sector, one way or another. Of course, Wednesday and Thursday are marked by the Christmas atmosphere and Christmas holidays. On Friday, there is inflation data in Tokyo. We saw how the Bank of Japan raised interest rates last week to 0.75, the highest level since 1995. And the yen's rate did not decline. Why didn't the yen decline? Simply because yields on US Treasury bonds remained high. Also, because the central bank in Japan had indicated that raising interest rates does not mean it will continue to raise them, nor does it mean it will tolerate a strong yen. They want the yen to remain weak, and perhaps, by the way, it might not raise interest rates in the coming phases, even if inflation remains stubborn. Today, inflation in Japan exceeds 3%, or is at 3%, which is higher than the Bank of Japan's target of 2%. So, we may not see sharp, severe fluctuations, especially in the next 2 days. Gold and silver are trading at record historical levels. Of course, this gives us an idea, perhaps, about what trading might look like at the beginning of next year, one way or another. Last week, we saw that Bitcoin regained stability at around 88 or 89,000, but this is a tolerance and a decline of about 6 to 7% in 2025. Of course, follow us on our platforms at 𝗪𝗵 for more updates and news on all our accounts, as well as in the interviews we present for technical and fundamental updates on global markets. Thank you very much.